Question 1. Which of the following is NOT typically covered by a standard cyber insurance policy? A. First-party coverage for data breach notification costs. B. Third-party coverage for costs related to a lawsuit stemming from a data breach. C. Coverage for losses incurred from physical damage to a building due to a cyber attack. D. Coverage for crisis management and public relations costs following a cyber attack. Answer: C. Coverage for losses incurred from physical damage to a building due to a cyber attack. Explanation: cyber insurance policies typically cover losses associated with the digital and intangible aspects of a cyber incident, such as data breaches, ransomware, and reputational damage, while cyber insurance policies cover data breach notifications, first-party coverage, liability related to lawsuits, third-party coverage, and crisis management costs, such as public relations. Physical damage to buildings caused by cyber attacks is generally not covered under these policies. The physical damage to property due to cyber attacks might be covered under separate property insurance policies. Question 2. Mr. Adams is the Chief Information Officer (EO) of a mid-sized company. He is considering purchasing a cyber insurance policy but is unsure how to evaluate the company's cyber risk exposure. What should Mr. Adams do first before proceeding with the purchase? He should immediately request a quote from the insurance company without conducting any internal assessments. B. He should evaluate the company's current cybersecurity posture by conducting a risk assessment and audit. C. He should purchase the policy and assess the risks afterward, as the policy will cover all risks automatically. D. He should only consult with his legal department to understand the policy's legal implications. Answer: B. He should evaluate the company's current cybersecurity posture by conducting a risk assessment and audit. Explanation: before purchasing cyber insurance, it is critical to evaluate the company's cybersecurity posture. A risk assessment helps to identify the most significant vulnerabilities, the potential impact of cyber risks, and the level of coverage needed. This internal audit allows Mr. Adams to make informed decisions when purchasing a policy, ensuring it aligns with the company's specific needs. Cyber insurers will also typically require risk assessments and audits to determine the policy's premiums and coverage options. Without this evaluation, the company may not be adequately covered. Simply purchasing a policy without understanding risks could lead to insufficient protection. Question 3. Which of the following best describes the concept of a business interruption coverage EICA cyber insurance policy? A. Coverage that compensates for income lost due to physical damage caused by cyber attacks on property and equipment. B. Coverage that compensates for loss of income resulting from network outages and disruption of business operations due to a cyber attack. C. Coverage that compensates for costs related to incident response, including forensic investigations and legal support. D. Coverage that compensates for fines imposed by regulators after a company fails to comply with data privacy laws. Answer: B. Coverage that compensates for loss of income resulting from network outages and disruption of business operations due to a cyber attack. Explanation: business interruption coverage is designed to compensate businesses for lost income when a cyber attack or system failure disrupts normal operations. It typically covers the costs of downtime and lost revenue, which can result from network outages, ransomware, or denial of service attacks. Unlike physical damage insurance, this coverage is focused on income loss and operational delays caused by a cybersecurity incident, ensuring that businesses do not face crippling financial losses while they work to recover from the attack. It does not cover physical damage, option A, incident response costs, option C, or regulatory fines, option D. Question 4. Which of the following is considered a critical element of a cybersecurity risk assessment for cyber insurance underwriting? A. The company's total number of employees and annual revenue. B. The company's history of cyber claims and incident response plans. C. The number of devices connected to the company's network. D. The amount of time the company has been in business. Answer: B. The company's history of cyber claims and incident response plans. Explanation: the underwriting process for cyber insurance considers a company's risk profile, which includes its history of cyber claims and the effectiveness of its incident response plans. A company with a history of frequent claims or poorly managed incidents may face higher premiums or reduced coverage options. Additionally, insurers assess the robustness of incident response plans as part of risk mitigation. While factors such as the number of employees, devices, and time in business can influence risk, the company's actual cybersecurity practices and past claims history are more directly tied to underwriting decisions. Question 5. which regulation mandates that companies notify affected individuals when personal data is compromised due to a data breach. A. The Health Insurance Portability and Accountability Act, HIPAA. B. The Payment Card Industry Data Security Standard, ECESS. C. The California Consumer Privacy Act, COPA. D. The General Data Protection Regulation, D. Answer: C. The California Consumer Privacy Act, CCPA. Explanation: the CCPA, effective in California, requires businesses to notify affected individuals when their personal information has been compromised in a data breach. This regulation mandates timely breach notifications to consumers whose personal data may have been exposed, while HIPAA, PCI DSS and GDPR also have data breach notification requirements. The CCPA is the one specifically discussed in the context of this question. HIPAA applies to health information, PCI DSS to payment card data, and GDPR to personal data of EU residents. Question 6. A company's cybersecurity policy includes multi-factor authentication, MFA, for access to sensitive data. Which of the following best describes the purpose of MFA in mitigating cyber risk? A. It increases the difficulty of launching ransomware attacks. B. It reduces the likelihood of phishing attacks by blocking fraudulent login attempts. C. It provides encryption for sensitive data during transmission. D. It ensures that only authorized individuals have access to critical systems and data. Answer: D. Ensures that only authorized individuals have access to critical systems and data. Explanation: multi-factor authentication, MFA, is a key security measure that requires users to provide two or more forms of verification before accessing sensitive data or systems. The purpose of MFA is to ensure that only authorized individuals can access critical information, thereby reducing the likelihood of unauthorized access due to stolen or compromised credentials. While MFA can indirectly reduce the risk of phishing, option B, it does not specifically provide encryption, option C, or directly prevent ransomware, option A. Question 7. Mr. Roberts is reviewing his company's cyber insurance policy after experiencing a small data breach. The policy includes a sublimit for incident response costs, which is $100,000. Mr. Roberts incurs $120,000 in incident response costs. Which of the following is true about how the policy will handle this situation? A. The policy will cover the full $120,000 as long as the total claim amount does not exceed the overall coverage limit. B. The policy will cover $100,000 and Mr. Roberts will need to cover the remaining $20,000 out of pocket. C. The policy will not cover any of the costs because the breach is minor. D. The policy will automatically increase the sublimit for incident response costs to $120,000 in this case. Answer: B. The policy will cover $100,000 and Mr. Roberts will need to cover the remaining $20,000 out of pocket. Explanation: the sublimit on a cyber insurance policy refers to a cap on specific types of coverage, such as incident response costs. In this case, even though Mr. Roberts incurred $120,000 in costs, the policy only covers up to the sublimit of $100,000. As a result, he will need to pay the remaining $20,000 out of pocket. It's important for policyholders to understand the sublimits of their coverage and ensure they have sufficient protection in place. Question 8. Which of the following is a key factor in determining the premium for a cyber insurance policy? A. The total number of employees at the insured company. B. The company's investment in cybersecurity measures, such as firewalls, encryption, and MFA. C. The insured company's total revenue in the previous fiscal year. D. The geographic location of the company's headquarters. Answer: B. The company's investment in cybersecurity measures such as firewalls, encryption, and MFA. Explanation: premiums for cyber insurance policies are largely determined by a company's cybersecurity risk profile, which includes the investment in security measures like firewalls, encryption, and multi-factor authentication, MFA. The stronger the company's cybersecurity posture, the lower the perceived risk, and thus the lower the premium. Other factors such as revenue and location may influence the premium but are less directly correlated with the insurer's assessment of the company's cybersecurity vulnerabilities. Question 9. Which of the following best describes third-party liability (ICA) cyber insurance policy? A. Coverage for a company's financial loss resulting from a breach of their own systems. B. Coverage for legal and financial damages resulting from a cyber attack that affects external customers or partners. C. Coverage for the costs of investigating and recovering from a cyber attack. D. Coverage for reputational damage caused by the exposure of sensitive internal data. Answer: B. Coverage for legal and financial damages resulting from a cyber attack that affects external customers or partners. Explanation: third-party liability coverage protects the insured company from legal and financial consequences arising from a cyber attack that affects external entities such as customers, vendors, or business partners. If a company's data breach leads to a lawsuit or claims from third parties, third-party liability coverage helps to cover the associated costs such as legal fees and settlement payments. First-party coverage would apply to losses the company experiences directly, while third-party coverage focuses on the impacts on others. Question 10. Which of the following is typically a required part of an incident response plan for a company that has cyber insurance? A. A procedure for investigating and identifying the cause of a cyber attack. B. A list of all potential cyber risks the company may face. C. A checklist of cybersecurity tools and software the company owns. D. A comprehensive audit of the company's physical infrastructure. Answer: A. A procedure for investigating and identifying the cause of a cyber attack. Explanation: an incident response plan is designed to provide a clear procedure for addressing and mitigating the impacts of a cyber attack. A key component of this plan is the process for investigating the incident and determining its cause. This investigation helps to guide the company's recovery efforts and prevent future attacks. While a list of cyber risks and tools may be useful in other contexts, identifying the root cause of an attack is critical for effective response and recovery under the terms of a cyber insurance policy. Question 11. Which of the following best describes the purpose of a business interruption clause in a cyber insurance policy? A. It provides coverage for lost revenue when a company is unable to operate due to a cyber attack. B. It covers the cost of legal fees associated with a data breach. C. It protects against the financial impact of a company's failure to comply with data privacy regulations. D. It covers the cost of repairing damaged physical infrastructure after a cyber attack. Answer: A. It provides coverage for lost revenue when a company is unable to operate due to a cyber attack. Explanation: a business interruption clause in a cyber insurance policy is designed to provide coverage for the lost income that results when a company is unable to operate due to a cyber attack. For example, if a company's systems are breached or taken offline by ransomware, the policy may help cover the income lost while the company works to recover its operations. Question 12. Which of the following is an example of a social engineering attack covered by most cyber insurance policies? A. A denial of service (DOS) attack that disrupts website access. B. An employee being tricked into transferring funds to a fraudulent account by a hacker impersonating the CEO. C. A virus that spreads through a company's network corrupting files. D. A data breach due to a vulnerability in an external vendor's system. Answer: B. An employee being tricked into transferring funds to a fraudulent account by a hacker impersonating the CEO. Explanation: social engineering attacks manipulate individuals into performing actions that compromise security, such as transferring funds or providing sensitive information. The scenario described, where an employee is tricked into transferring funds by a hacker posing as the CEO, is a classic example of social engineering. Cyber insurance policies often cover losses related to social engineering attacks. Question 13. Which of the following is generally excluded from most cyber insurance policies? A. Costs related to forensic investigations following a data breach. B. Legal fees associated with defending against a data breach lawsuit. C. Coverage for the loss of income due to a cyber attack. D. Losses resulting from intentional or criminal acts committed by the insured's executives. Answer: D. Losses resulting from intentional or criminal acts committed by the insured's executives. Explanation: most cyber insurance policies exclude coverage for losses resulting from intentional or criminal acts committed by the insured's executives or employees. This exclusion is typically included to prevent moral hazard, as it would allow companies to benefit from crimes committed by their own leaders. Question 14. In the context of a data breach, what does notification costs typically refer to in a cyber insurance policy? A. The cost of notifying the affected individuals about the breach. B. The cost of investigating and identifying the breach's source. C. The cost of repairing physical damage caused by the breach. D. The cost of training employees on cybersecurity best practices. Answer: A. The cost of notifying the affected individuals about the breach. Explanation: Notification costs refer to the expenses associated with informing individuals whose personal data may have been compromised in a breach. This may include the cost of sending out physical or electronic notifications, providing credit monitoring services, or setting up a help desk for affected individuals. Question 15. Which of the following is the primary reason why businesses must comply with data privacy regulations like the General Data Protection Regulation (EDR)? A. To prevent social engineering attacks. B. To avoid penalties and lawsuits resulting from data breaches. C. To lower the cost of cyber insurance premiums. D. To ensure employees have secure access to company data. Answer: B. To avoid penalties and lawsuits resulting from data breaches. Explanation: compliance with data privacy regulations such as GDPR is essential to avoid legal consequences, including penalties, fines, and lawsuits. GDPR imposes strict requirements on businesses that handle personal data, and non-compliance can result in significant financial penalties as well as damage to the company's reputation. Question 16. A company experiences a data breach and the incident response plan includes a step for notifying affected customers. Which of the following is the primary legal requirement for notification in most jurisdictions? A. Customers must be notified within 48 hours of discovering the breach. B. Customers must be notified within a reasonable time frame, typically 30 days. C. Notification is only required if the breach involves financial data. D. Customers must be notified only if their data was stolen and used. Answer: B. Customers must be notified within a reasonable time frame, typically 30 days. Explanation: most jurisdictions require that affected individuals be notified of a data breach within a reasonable period of time, typically within 30 days. This timeline can vary depending on the region and the severity of the breach, but timely notification is key to mitigating the impact on affected individuals and complying with data protection laws. Question 17. Which of the following best describes a ransomware attack in the context of cyber risk? A. A hacker demands payment from the target company in exchange for not releasing sensitive data. B. A virus infects the company's system, stealing passwords and sensitive information. C. A hacker floods the company's server with traffic, causing a denial of service. D. A phishing scam that targets employees to gain access to company accounts. Answer: A. A hacker demands payment from the target company in exchange for not releasing sensitive data. Explanation: ransomware is a type of cyber attack where a hacker encrypts the target company's data or locks access to critical systems and demands a ransom payment in exchange for restoring access. Often, the hacker threatens to release the stolen data publicly or sell it to the highest bidder if the ransom is not paid. Question 18. Which of the following is typically covered under cyber extortion coverage in a cyber insurance policy? A. Costs associated with defending against a data breach lawsuit. B. Ransom payments made to attackers who have encrypted the company's data. C. Legal costs for non-compliance with data privacy regulations. D. The cost of recovering physical data stored on damaged devices. Answer: B. Ransom payments made to attackers who have encrypted the company's data. Explanation: cyber extortion coverage typically applies when a company is forced to pay a ransom to cyber criminals who have threatened to encrypt or leak sensitive data. This coverage can help reimburse the company for the ransom payment itself, as well as associated costs such as negotiation and legal fees. Question 19. Which of the following is an example of first-party coverage, ECA cyber insurance policy? A. Coverage for the legal fees associated with defending the company in a lawsuit filed by an affected customer. B. Coverage for the cost of recovering lost data following a cyber attack. C. Coverage for the damage caused to a third party as a result of a data breach. D. Coverage for the cost of notifying third-party vendors affected by a breach. Answer: B. Coverage for the cost of recovering lost data following a cyber attack. Explanation: first-party coverage in a cyber insurance policy protects the insured company itself. This includes coverage for the costs associated with recovering lost data, mitigating the impact of a cyber attack, or repairing damaged systems. In contrast, third-party coverage would protect the company from liabilities arising from harm caused to others, e.g., customers, vendors. Question 20. A company wants to reduce its cyber insurance premium. Which of the following actions would most likely lead to a premium reduction? A. Increasing the company's deductible for cyber incidents. B. Reducing the coverage limit for third-party liabilities. C. Increasing the company's cybersecurity insurance coverage limits. D. Installing security software and performing regular security audits. Answer: D. Installing security software and performing regular security audits. Explanation: insurers typically offer low premiums to businesses that have strong cybersecurity measures in place. This includes installing security software, performing regular security audits, and implementing best practices for network and data security. These measures reduce the company's risk of a cyber attack, which in turn can lead to a reduction in premiums. Question 20 on which of the following is an example of third-party coverage leak: a cyber insurance policy? A. The cost of notifying customers about a data breach. B. The cost of repairing a company's network after a cyber attack. C. The legal fees associated with defending a lawsuit filed by a customer whose data was compromised. D. The cost of hiring a cybersecurity firm to investigate a breach. Answer: C. The legal fees associated with defending a lawsuit filed by a customer whose data was compromised. Explanation: third-party coverage in a cyber insurance policy protects the insured company against claims made by external parties. For example, if a customer sues the company for a data breach, third-party coverage can help cover the legal costs of defending against the lawsuit. Question 22. Which of the following is a key benefit of having a cyber insurance policy? A. Coverage for financial losses due to government fines or penalties. B. Protection against the reputational damage caused by a data breach. C. Reimbursement for the full cost of replacing physical IT infrastructure. D. Coverage for the costs of training employees on data privacy laws. Answer: B. Protection against the reputational damage caused by a data breach. Explanation: while cyber insurance typically covers financial losses, it may also help mitigate reputational damage caused by a data breach. Many policies offer public relations assistance and other resources to help businesses manage the negative effects of a breach on their reputation. Question 23. Which of the following actions is most likely to trigger a cyber insurance claim under data breach coverage? A. A hacker accessing sensitive customer data without authorization. B. A system outage due to a power failure in the company's data center. C. A customer accidentally sending sensitive information to the wrong recipient. D. A company employee using unauthorized software on the company network. Answer: A. A hacker accessing sensitive customer data without authorization. Explanation: a cyber insurance policy typically covers losses resulting from data breaches, which occur when an unauthorized party gains access to sensitive information. In the scenario described, a hacker's unauthorized access to customer data would trigger a claim under data breach coverage. Question 24. Which of the following best describes the role of a cybersecurity policy? A business's risk management strategy. A. It outlines the procedures for responding to a cyber attack and mitigating damages. B. It is a set of regulations that must be followed by third-party vendors. C. It is a legal document that ensures compliance with data privacy laws. D. It specifies the amount of insurance coverage a business should carry. Answer: A. Outlines the procedures for responding to a cyber attack and mitigating damages. Explanation: a cybersecurity policy is a critical component of a business's risk management strategy. It outlines the processes, tools, and procedures that the organization should follow in the event of a cyber attack, helping to mitigate damages and ensure a prompt response. Question 25. Which of the following is typically excluded from a standard cyber insurance policy? A. Losses from phishing scams that compromise sensitive data. B. Coverage for damages caused by a hacker exploiting a known vulnerability in unpatched software. C. Losses from physical damage to IT hardware caused by a cyber attack. D. Coverage for the cost of hiring a forensic investigator to determine the cause of a breach. Answer: C. Losses from physical damage to IT hardware caused by a cyber attack. Explanation: standard cyber insurance policies typically do not cover physical damage to IT hardware caused by a cyber attack. While they often cover the cost of data recovery, business interruption, and legal liabilities, they typically do not cover the repair or replacement of physical equipment, unless explicitly stated. Question 26. What is the primary purpose of a cybersecurity liability coverage in a cyber insurance policy? A. To cover the cost of restoring systems after a cyber attack. B. To protect the business from claims made by third parties due to a data breach. C. To provide funds for training employees on cybersecurity best practices. D. To cover the cost of replacing damaged or stolen physical equipment. Answer: B. To protect the business from claims made by third parties due to a data breach. Explanation: cybersecurity liability coverage protects a business from third-party claims arising from a data breach or cyber attack. This could include claims from customers, vendors, or other third parties who were impacted by the breach, such as lawsuits or regulatory fines. Question 27. Which of the following cyber risks is most likely to be covered under a network security insurance endorsement? A. Data lost due to accidental deletion by an employee. B. Losses caused by a malicious software attack. G. Ransomware. C. Losses due to a delay in processing customer transactions. D. Losses from failure to comply with data protection regulations. Answer: B. Losses caused by a malicious software attack. G. Ransomware. Explanation: a network security endorsement typically covers losses caused by attacks that affect the company's network or its systems, including malicious software, such as ransomware. It may also cover other types of cyber attacks that affect the security and operation of the company's network. Question 28. Which of the following is most likely to be included in the definition of a cyber event under a cyber insurance policy? A. An employee forgetting their password and locking themselves out of the system. B. A breach in a third-party vendor's system that exposes customer data. C. A temporary loss of internet connectivity due to a service outage. D. A company's website being temporarily down for maintenance. Answer: B. A breach in a third-party vendor's system that exposes customer data. Explanation: a cyber event typically refers to any incident that disrupts a business's IT infrastructure or exposes data. A breach in a third-party vendor's system that exposes customer data is a classic example of a cyber event covered by a policy, as it can lead to data loss, legal consequences, and reputational damage. Question 29. What is the typical time frame for a company to notify its cyber insurance provider about a cyber incident to ensure coverage? A. Within 24 hours of discovering the incident. B. Within 7 days of discovering the incident. C. Within 30 days of discovering the incident. D. Within 60 days of discovering the incident. Answer: B. Within 7 days of discovering the incident. Explanation: most cyber insurance policies require businesses to notify their insurer about a cyber incident as soon as possible, typically within 7 days. Delaying notification could jeopardize the claim or result in a reduction of coverage, depending on the terms of the policy. Question 30. Which of the following best describes business continuity planning in the context of cyber risk management? A. Creating a set of guidelines for ethical data collection and usage. B. Developing procedures to restore operations after a cyber attack or system failure. C. Designing a disaster recovery plan for physical infrastructure. D. Training employees to recognize and avoid phishing attacks. Answer: B. Developing procedures to restore operations after a cyber attack or system failure. Explanation: business continuity planning involves creating strategies and procedures to ensure that critical business operations can continue during or after a cyber attack or system failure. This planning typically includes procedures for quickly restoring systems and minimizing downtime following a cyber incident.